All right, good morning, everybody. We're going to begin today's first time homebuyer seminar. We are going to begin. We are also live, by the way, just so everybody know. We're streaming live on Facebook as well as YouTube. For those that don't know, my name is Naseem Smith, and I serve as the Workforce Development Coordinator at El Concilio. Can you all just give me a thumbs up for those that I can see? Thank you so much, Julia. Good morning. Good morning, Sean. Good morning, Nasir. Ida and Maria. So we're going to begin with Maria. Um, Good to see everybody. So, Maria, I'm going to just bring you up and mute myself.
Good morning, all. I can't see you, but and I'm having some difficulties here with my laptop. But I just wanted to introduce myself. My name is Maria Pekovsky, and I'm with Allied Mortgage Group. I've been in the mortgage industry, being a loan officer for the past 18 years. Um, it's been a while. So today we're going to talk about the pre-approval process, buying process, first-time home buyer programs, and I would like to take some questions as well at the end because every situation will be unique. So let's start with the pre-approval process. Um, Naseem, I don't know if you can change the slide. Okay, yeah, you can go to the next one. Yep. So the pre-approval. Usually, the pre-approval process starts with collecting the documents. So the list of documents required to start the process is listed on the slide. As you can see, we usually require 2 years of tax returns. So it would be the past 2 years would be the 2020, 2021. If you haven't received your 2021 tax returns yet, we'll take the last pay stub for 2021. However, if you're looking to apply for any sort of down payment assistance programs as a first-time home buyer, you will need to provide 3 years of tax returns. So it would be 2018, 19, and 20, or 19, 20, and 21. Now, we also need to see your W-2 forms for the last 3 years if you're once again applying for the down payment assistance program. If you're applying for any type of standard loan, FHA, or conventional, we will look at the last 2 years of your employment. If you're receiving any sort of SSI, disability, pension, we'll need to request the award letters. And also child support. If there's any child support, we need to see 12 months of payments. Payments need to be on time, and we will also request a court order for the child support in order to use that as income. Now, we will need 2 current pay stubs because your year-to-date income is important. We know that in 2020, due to COVID, a lot of clients were out of work for quite some time, so we definitely need to make sure that you're back to work full time. So we will require an employment verification as well. So your employer will need to fill out an employment verification form and confirm that you're back to work full time, and we'll use your current income for that. Now, we also need your driver's license so we can pull your credit, and most 2 recent bank statements, and any sort of assets that you have, such as 401k, stocks, bonds, mutual funds, things like that. We'll need to review that as well. Now, I can't stress enough about the fact that when someone is trying to buy a house, they barely have any funds in their bank account. Now, a lot of clients don't believe in banks. They like to keep cash. Now, that's not acceptable. We need to make sure that all of your funds are in your bank account. It could be a checking account, it could be savings account. Now, you can also get a gift, any sort of gifts from a family member. That's allowed. We can talk about it more in detail, but we definitely need to provide 2 months of bank statements without any large deposits going into your account. If you had any large deposits, we need to source them. We need to show where they came from. So if it was a gift, we'll get a copy of the check and a gift letter from a family member. However, if it was cash, unfortunately, we cannot use cash at all. Any deposit over $500 in cash will need to be documented. So, but like I said, every situation is unique. So if that happened, we can talk about it and we'll find a way to fix it. Once we get the information, once we get all of your documents, we will pull your credit. Your credit is very important. Now, you, in order to qualify for any sort of down payment assistance program, you need to be at a 660 credit score. That's for FHA and conventional program. If you're applying for any type of other program without the down payment assistance, we can go to as low as 580. So we will review your credit at the time. If your credit is not where it needs to be, I will definitely consult you. We'll come up with a plan and I'll let you know where you need to be in order to get the down payment assistance or get where you need to be in order to buy the house. Now, we also will review your income. So your income versus your credit will be basically determine how much you can afford, how much you can get approved for, and what type of program we're going to apply for. Your employment history is important. We need to have at least 2 years of employment. Now, it doesn't have to be the same job. You can be working, different jobs, as long as it's the same field, same type of work that you've been doing for the past 2 years, but with a different company. That's totally fine, as long as we can verify that. As I said, Social Security and disability and pension income is acceptable. We just need to provide a proof that it will continue for 3 years. Now, based on income and credit, we will determine your maximum approval and the program that you qualify for. Now, the amount that you might qualify for might not be the amount that you're comfortable with paying monthly. So we will also talk about it in detail as far as how much do you want to pay monthly. You might be, based on income and credit, you might be eligible to get approved for a $400,000 home, but you might not want to be paying $2,500 a month. So once we gather all of your information, your credit, your income, we talk in detail as far as what goes into paying the mortgage. It's not just your mortgage payment. Your mortgage payment will also include your property taxes, will include the insurance, and in most cases will include mortgage insurance if you're not putting down 20%. So there will be mortgage insurance. Any down payment less than 20% mortgage insurance will be required in these cases. Now we can go to the next slide. Yep, I talked about that briefly. So the type of programs, basically three main programs. There are a lot of loan options out there, but three main ones would be the FHA, which is a government program, VA for veterans, government program as well, and conventional. For any type of down payment assistance program for the first-time home buyers, there will be income and purchase limits. So, and we'll review those as well. I believe my next slide will show that. And your debt to income ratio, excuse me, cannot exceed 45%. So all of your liabilities, all of your expenses that are on your credit report, including student loans, car loans, credit cards, versus your income, will determine what your debt to income ratio will be. Now, if you're not applying or if you don't qualify for a down payment assistance program, your debt to income ratio can exceed 45%. So it could be all the way up to 56. Now, once again, we don't know if we want to go that high. And once we're reviewing your information, we will determine what the qualifications would be. So my next slide would talk about the options. Now, the down payment assistance part of the loan, which will cover most of your down payment, if not all, could be done with two programs. So one program is FHA, which is an FHA option. It's a government program, as I said. The required down payment would be 3.5% off of the purchase price. There will be mortgage insurance that's paid monthly. You have to meet the income limits. So there will be income limits for that program as well. Your minimum credit score, if you're applying for the down payment assistance, is 660. However, if you're not applying for the down payment assistance, we can go as low as 580 credit score. Now, you might not get the best rate out there with a 580 credit score, but it's all doable. Now, you cannot buy a duplex through the down payment assistance program. It has to be a single family home. However, if you're applying for an FHA government program without the down payment assistance, duplexes are allowed. So you can purchase anywhere from 1 to 4 units with only 3.5% down. So the main difference, and I believe my next slide will talk about that, is the conventional option with the down payment assistance. So with an FHA, you need 3.5% down. With conventional, we can go to as low as 3% down payment. However, in most cases, your credit score needs to be higher than 660. 660 is minimum, but in order to get approved for a conventional program, from my experience, you need to be at least, at a 680 to 700. Now, the down payment assistance is allowed with conventional option as well. There will be mortgage insurance that's based on your credit score. There will be income limits as well. And once again, duplexes and multifamily units are not allowed, only single family homes. You can buy a condo or a single family home in that case. And let's talk about the income limits that I mentioned before. So the next slide would show you, I use just the 3 counties because they're the major counties here: Bucks County, Montgomery, and Philadelphia. So in Bucks County, your maximum purchase price cannot exceed $377,500. And the income limit goes off of the family members as well. So it will be a total amount of family members and their total income. So it cannot exceed 96,600 for 1 or 2 family members. So if you have 2 working individuals, we need to make sure that the income limit does not exceed 96,000. If you have 3 or more family members, which kids are included, they're your dependents, the income limit would be 111,000 for the down payment assistance program. I'm sorry, that's for Bucks County and Montgomery. For Philadelphia, your maximum purchase price is 461,400, and the income limit for 1 or 2 family members cannot exceed 115,000. For 3 or more would be 135, which in most cases is doable. If you're buying in Philadelphia, the income limit should not be exceeding that. So that's a little bit about the income limit and the down payment assistance program. Now, a little bit more in detail about the down payment assistance program. Let me see if I'm on the right slide. I apologize. Yep, so those are the limits. And the next slide, we'll talk a little bit more about the actual down payment assistance program. So the down payment assistance program for first-time home buyers, once again, you have to be a first-time home buyer. You cannot be selling another property and purchasing a new one. You're not going to be considered a first-time home buyer. If you co-signed for someone, or if your name is on title for another property somewhere, some way, we will find out. So you need to be a first-time home buyer. So the program is called KFIT. It's done through PHFA. We're one of the first approved lenders with PHFA. And the down payment assistance program will be 5% off of the purchase price. So, for example, if the purchase price is $200,000, I just came up with a number, $200,000. Your down payment assistance will be $10,000. So 5% off of the purchase price. If the price is more, $300,000, you will get $15,000 in assistance. And for the most part, it will cover your down payment, especially if you're obtaining an FHA loan. If it's government financing, you're required to put 3.5% down. your assistance is 5%. It will cover the down payment, and you will have a little bit more money left for to cover your closing costs as well. So this $10,000 is being recorded as a second mortgage, and it's fully forgiven after 10 years. So within that 10-year period, there's no interest. It's a zero interest loan, and 10% of it is being forgiven every year. So let's say year one, $1,000, year two, $2,000. Now, if you decided to sell the house, let's say on year five, you will just pay the remaining balance off of that loan. So basically, the main goal is that you have to stay in the house for 10 years and you have to live there. It has to be owner occupied. So you cannot purchase this house and obtain the down payment assistance for an investment property. It has to be owner occupied. So on the right hand side, I have a small example of an FHA type of loan with the down payment assistance. So let's say if the purchase price is $200,000, 3.5% down payment, which is $7,000. Your closing costs are going to be around $15,000. Now, that's a rough estimate. It will really depend on how much your property taxes are, how much your homeowner's insurance is, because you have to pay your escrows, which are your taxes and insurance up front. So that number will really vary based on where you're purchasing a house. If it's in Philly, property taxes will be a little cheaper. If you're buying outside of Philadelphia, Montgomery County, Bucks County, they will be a little bit on the higher end. Once again, depends on the area. So going back to the scenario, if the down payment assistance is $10,000, it will cover your down payment. So out of pocket is $12,000. It's actually not $12,000 because I didn't subtract the $3,000 that you have left. So in reality, you will need about $9,000 after all. And you can also request seller's assist. Seller's assist is allowed. Now, so in this market, I would say it's difficult to be able to have your, seller pay for some of your closing costs, but it's doable. It's possible. We see that happen all the time. You can request, seller's assist from the seller to cover some of your closing costs. So on FHA loans, you can get up to 6% in seller's assist. On conventional loans, you can only get up to 3%. So if you get seller's assist on top of getting the down payment assistance program, pretty much you might not need to come up with, any funds other than your inspection, your appraisal, and giving a deposit when you're signing the contract. So it could be a couple $1,000s, but it also depends on your situation. It depends on the program. It depends on a lot of things. So I do suggest to start the pre-approval process before you actually start looking for a home, because you might like a certain house and you get really excited, emotions kick in, and unfortunately then when you start the pre-approval process, something pops up where credit might not be good enough or high enough, your income might not be there. So I always recommend to start the pre-approval process before you start looking for a home. I'm sorry, I got sidetracked for this particular scenario. Your interest, by the way, interest rates in the past 2 weeks, they've been going up. Right now, as of Friday, which was yesterday, the interest rate for the down payment assistance is around 4.25%. So if we're basing 4.25% and the $200,000 purchase price, your principal and interest payment will be around $949. Your taxes and insurance, we're estimating once again around $275. Your PMI, which is your mortgage insurance, around $145. So your total monthly payment will be around $1,369. Now, it's a rough estimate. Don't hold me to it. Once we go through the pre-approval process, we can get you exact numbers, and your property taxes might not be $200 a month. If they're only $1,400 annually, your monthly payment will be much cheaper. But nowadays it's definitely makes more sense to pay for your own mortgage and your own house versus paying someone else's off and paying rent. So it doesn't matter if you can get approved for 120 $150,000 home. It's better to start somewhere, especially when the down payment assistance programs are available. You don't have to come up with 100% of your own down payment. It will be covered by the assistance. I strongly suggest to start the process, and we'll definitely get you there. If you're not fully ready, income, maybe income is not all there, maybe you need to be employed for a little bit longer, maybe your credit score is not high enough, we'll guide you through the process and we'll let you know what needs to be done to definitely get there. It's always what they say is it's always a good time to buy a house, and it's always good to be buying a house 5 years ago. So 5 years from now, we're going to be thinking, oh my God, I should have been doing that. I should have started the process. And it's very important. Another part of the assistance program, you will need to get the counseling education, which you're doing right now. You're going to get your certificate. So with that certificate, you will be eligible to apply for the down payment assistance program, and we do all of that. We do the pre-approval in the beginning stages. We also help you apply for the assistance. We're in touch with the counseling agency if need be, and the in-person counseling is done for someone who has a credit score less than 680 or at 680, and if the credit score is above 680, you can do online education, which is you take a course online. But we'll guide you through all of that, and if you have any questions, that will be that will be done for you as well. I'm not sure if I just flew by through this whole process, because like I said, every situation will be unique, and you might have your own scenario that you want to run by us, and we can help you with that. It's very important who you use as your real estate agent, because after you get a pre-approval, you definitely need to be in good hands to guide you through the rest of the process. Inspections, appraisal, getting comparables, that you're not overpaying for a house, and things like that. So I think I'm going to hand it to Ida at this point, so she can talk about the real estate portion of this course.
Sorry, give me like 2 seconds. I was just trying to get it, and it's but before we transfer it over to Ida, Maria, thank you. I just want to make sure everybody who isn't on our StreamYard currently to please drop your name, email address, and number to enter our raffle today. And thank you all again for joining. I'm gonna fall back.
Yeah, and maybe I missed something. Like I said, if I missed anything, we can definitely talk about it more in detail. If you guys have any questions for me right now while I'm online live, ask away.
Hello?
Yep, Ida, can you hear? You're off mute now.
Can you hear me? Hello?
Ida, you're good. We can hear you.
Okay. Okay. Good morning, everybody. My name is Aida Rosales. I work for Legal Real Estate. I'm a realtor and I have been doing this for over 20 years. I love it. I love to work with people to get, the dream to becoming homeowners. Part our work is to start with the first meeting with people interested in buy a property. Our first meeting usually involves explanation of documents that we need to use, and I'm going to talk about a little about each one. First is notice, consumer notice, and it's just explanation or your rights when you're trying to buy, sell, or any kind of transaction in Pennsylvania, Philadelphia, in general, all the areas. Consumer notice explain, like I said, your rights. After that, we go to look at the next document will be the buyer's agent's contract, and that is a contract that is signed between the potential buyer and the realtor, allowing us to represent your interests and go through all the process that you needed. After we got that, we have like a pre-counseling meeting, and in that pre-counseling meeting, what we do is just address interest in the house, allow you to know we what kind of tools we will use it to help you, how we perform search hunters on your behalf, and all that related to find the perfect house for everybody. That means everybody's different, everybody's difference are different. And we try everybody with the same respect, trying to find what is best for them. When we go through this, we are already in the step that you need to get your pre-approval. The pre-approval is the process that Maria was explaining to you, and allow you to begin your search. We, really knowing what you are going through and what you can buy, what you can afford, and what you feel comfortable paying. You need to get that through a approved lender. That a lender need, always need to have a strong track record and providing you the high level of professional service. You have the right to shop around to find, um, different lender to see that you are receiving the best offer based on fees and service. When you already have that, we start the fun part of this, the house hunting. We, like agent, we have all the tools that you need to find a house. We do automatic search through the MLS, multiple listing service, that you will receive by email updated listing, everything that go through you the search criteria. That mean you already have the criteria explained to us. You, for example, you want to buy a 4-bedroom house with a garage. Okay, any property that come to the market in the range price that you are, pre-approved to buy, you will receive it notification. You will receive email with the information for every listing who meet your criteria. After when you select one of the property that you want to see it, you need to take in mind that usually it's required 24 notice hours before I can show you the property. You need to let me know, before what are the property you want to see, and that way I can schedule the showings for you. We are member of the Bright MLS that is serving Delaware, Pennsylvania, New Jersey, Virginia, Washington, and we are servicing more than 20 million customers. And that means that you will get the best access to the market at all the current properties and the criteria that you want to go. After you found the property, you found your dream house or the first star house, we start with the offer. Offer is the contract that we present on your behalf when you are trying to buy a property. First, we need to discuss the terms of the offer, the contingency, and prepare and negotiate for the offer is what the agents and along with the client we will do. Then we will need to review documents as seller property disclosure statement, and in that case is what the seller tell us what they knew about the property. In some case, people don't live in the house they're selling, and they can provide seller disclosure. But the majority of the case, we get the seller disclosure before we send the offer or along with the offer. Then we go through the closing cost. Closing cost is an estimated, and I need to reinforce that word, estimated cost for everything that including monthly payments and everything basis and the offer. Along with that, we are going to review in that time the ceremony day, the financing contingency, your right to inspect the property and the different inspection that can be sent. What is the first deposit that is need to be made, and all that is related with the offer and the process for the offer. We agents help you to understand the terms, the contingency, and the liabilities that's described in the agreement of sale. Next step in the process is the inspection contingency. We recommend a home inspection, and the home inspection are advised to conduct a deed home and environmental inspections. We, like agent, follow up with the time frame and different options that's offered under the inspection contingency. A different kind of inspection. The building inspection include non-invasive visual inspection of electrical, plumbing, heating, and cooling system that are embedded in that device. The inspector will recommend the extent of the inspection, and then we get a written report. The written report describes material defects observed during the inspection, along with any recommendation or further investigation that the inspector determined that is necessary. And always will include correction or action that need to be taken to correct that problems. We provide with a list of the inspector. You can, with at least 3 inspectors, you are the ones who choose which one you want to go with. And we have the PI Home Inspector Declaration of Compliance. That means that the state that the home inspector complying with all the Pennsylvania laws. Otherwise, they be found that they cannot be used in the negotiations. After we got through the inspection and we get our offer accepted, that's all right, yes, we get the house. Then you need to go through the loan process for that. You already have a pre-approved you get before you start hunting for the house. When you found your house, you go back to the bank and then start the process for the applying for the loan. That's a contingency, that's a loan, and the offer that you need to get and approved for the mortgage. And then you can ask for different financial options. You need to choose. It's very important to have a very accredited and experienced lender who understands the market and its lending capabilities. Commitment. Commitment means banks promise to fund the loan and will make that the buyer need to apply for the loan immediately after the offer is accepted. And to get the loan approved is again the requirement that Maria already explained very well to you, and basically is credit report, income, employment history, and assets and liabilities. That will be the ones that determines you approve and what kind of proof you get. We need to insurance title in the property. That means that the seller will transfer ownership of the property to the buyer at the time of the settlement in the form of a deed. We get clear title, and to get a clear title, the buyer need to do a title search and title insurance. Both are generally that's required also by the lenders, by the mortgage lender. Title search is the investigation on the property history to determine is any financial liens or claim to the property beyond the seller's knowledge. If the title search reveals that the seller cannot grant a good and marketable title, free of encumbrances, the buyer can rescind the sale and have all the money from the deposits returned. Title insurance is something that we need to get that protect the buyer from claims or lien that may be discovered after the purchase is completed. For example, a lien poorly filed against the property and discovered several years after you purchased the property, a title insurance policy should pay some or all the costs of addressing that issue. It's different kind of types of titles insurance. Several variations of the title insurance, including policies that cover certain property defects or the failure of the previous owner to obtain proper permits for work done on the property. Buyers need to talk about with the title agent about the scope of protection offered by the title insurance policy, and that's really, really important. Finally, and maybe the most exciting step of this, besides find the house, is closing in the property. That means it's the settlement. It's the final step in executing your real estate transaction. 24 hours before we go to the settlement, we do a final walkthrough to the property. That means to assure that the house is empty, is clean, and in the same condition as before when we went to the property first time. And after the inspections, the title insurance agent is the one who conducts the closing at the place or the real estate company place. The title agents conduct the closing, and you and your agent should attend. The ALTA or closing statement is a detailed list of credits and expenses, including prorated adjustment for the buyers and seller. Agents should review and explain to you at the settlement table. And that's a document that you get to prove that you bought that property. You need to provide with the closing with a certified check. That is the balance that you owe in the purchase price. The closing agent will gather all necessary signatures and all the documents, including the deed. Then the seller proceeds. The net balance of the sale of the property is transmitted by title and executed by the executed deed to the buyers. Public record. Title agent will be again the one who record all the relevant documents in City Hall. After that, congratulations, that's the party started. You now own the property. You take possession of the property by accepting the signed deed, keys, and physical possessions. And at this point, if you have any question, please feel free to ask. I'll be more than happy.
Hey, can you guys hear me?
Yes.
Okay, great. I'm sorry. I'm sorry. Can y'all hear me when I'm off screen or no?
No, we
Oh,
couldn't hear
got it.
you.
Okay, got it. I'm sorry. This was one of the questions that was on our Facebook. So could one of you feel free to answer?
Oh,
Okay.
sure. Yeah, the pre-counseling, yeah, it is mandatory. You need to take the pre-counseling. Like I said, if the credit score is below or at 680, you have to do in-person counseling, which is Zoom is now nowadays considered in person. Um, and if your score is above 680, you can do your pre-counseling online. And counseling is important, I believe, because that helps you get familiar with the process to begin with before you start. And so you know what you're getting yourself into. It's it's a little bit more in detail than just reading online. Yeah, so it is. You need to do counseling.
Great, great. And then another question that we had um, is what's the ideal deposit percentage for the first time home buyer?
There's really no ideal amount. I mean, I can't say that you have to put 20% down and make this, and it will make this process unbelievably easy. I just feel that the percentage will depend on your current situation. If you can put more than 3% down, great. That's amazing. Your mortgage insurance will be lower. Most likely, you can qualify for a conventional loan. You can still qualify for the down payment assistance program, but the down payment assistance program can only be applied if you're putting down 5% or less. If you have the funds and you have the ability to put down more than that, you will not qualify for the assistance program. So assistance programs are designed for clients and people and customers that actually need it. So if you have the ability to put down more than 5%, you really don't need the down payment assistance program, and you will just go through a standard conventional loan, most likely. So there's really, like I said, there's really no ideal amount. We really need to review the situation and see what will be best in your particular case.
Great, great. Thanks for answering that. And then another question that was actually asked in our comments. Could you answer that to everybody so that could also be shared?
Let me
And
see which one.
yes, and that's what's the best way to research different loan programs?
I mean, the best way, I believe I just sent in our website, my website. I shared the website in the comments section. It doesn't have, and I thought it had a little bit more detailed explanation about the program. Once you go through the pre-approval process, what we usually do is we compare different options, and we'll let you know what you qualify for. You can do your research online. Just don't do too much reading because you might be reading something that might not apply to you in your particular case. Like I said, and I'm going to repeat that again, your situation is unique, and someone might be qualifying for a conventional loan with 20% down and 720 credit score,
Mhm.
and you might not be able to get that program. So in order for you to find out what would be best in your current situation, your position, I think the pre-approval process. Don't be afraid to pull your credit now. I just, I get a lot of, oh, I don't want to pull my credit because it will drop 5 points or 10 points, or, people once again read online and they're scared of pulling their credit. Without you actually having your credit report and your credit score, there's no way for you to find out what needs to be done, if you need to work on it, or if you're fully qualified as of right now. And once again, do not believe Credit Karma, because Credit Karma has much higher credit scores than what your credit score actually is when we pull it. I get that all the time. You pulled my credit score. Why did it come back at 620? Credit Karma is saying I'm at 700. Now, Credit Karma is using what's called a Vantage score. We use what's called a FICO score. So unless you can get on the website such as, Experian, or maybe one of your credit cards has a FICO score driven model, that's a more accurate score versus Credit Karma. So I'm not suggesting to keep pulling your credit with 5 different banks and lenders and try to apply until you get it. But what I'm saying is you really need to have your actual real credit report. And so then we can determine, is there anything that needs to be done? Do you need to pay off any collections? Because sometimes paying off collections might not be a good thing if they're old collections. So we go through that process. When you apply, we will come up with a plan for you on strategy, what needs to be done in your situation.
Great, great, great. And Ida, if I can actually get your information as well, I can definitely share that to everybody. Are there any additional questions that we have for the ladies today? And I'm checking both our YouTube, our Facebook, and our comments on StreamYard today. If we don't have any questions, thank you, ladies, today for joining us. This was really great information. Somebody just great, Ida. Oh, thank you, Banner.
Now, if I could just mention something real quick as well. We talked about the FHA conventional down payment assistance programs. Once again, it might not be what you qualify for. We also have a program which has a stated income option where you can qualify based on your bank statements, your deposits. If you're self-employed, there's an option out there for you as well. So don't be afraid, apply, and we will determine what you qualify for.
It's important for everybody to know that Maria said at the beginning, this is the best time to try to get the house. It's always the best time, the time that you are now. You will think, okay, maybe I can wait, a little longer. No, today is the best time, and from now, any time will be the best time.
Because what's going to happen, rates will continue going up. I don't see prices dropping anytime soon. So, home prices. We see a huge jump from, 2019 to 2022. You can see that the prices are completely different from what they were before. Same thing is going to happen with interest rates. We were at 2 point something, now we're already at 4 point something, and then we'll just continue to increase. So in order for you to keep that low payment, time is now. Don't be afraid. Everybody qualifies. You might just need to spend some time and effort on it, but we'll definitely guide you through the process.
Great, great, great. Thank you, ladies, so much for that. Julia just also put a comment in our message. And then Ida, also, is there a way you can kind of simplify what you were previously stating, I guess, about the process, if you can?
Well, to simplify is we need to go to initial a meeting with the person interested to buy the programs. In that initial meeting, we sign some legal form that in the Pennsylvania basically protect the buyer's interest and establish the kind of relation that we're going to have. After we got that initial meeting, we got information and the kind of property they are interested. If they already have the pre-approved, that's always the best thing to have before you started anything. You don't have the pre-approved, we can help you. To give information and the way to apply for pre-approved. When you have your pre-approved, that's the first most important step that you need to take. Then we go to the fun part. Like I said, we go house hunting, and then we see properties. In order to do that, we provide you with listing information through email that you receive it updated, like every day, every single property to go to the market, the property that you meet, the criteria that you already told us that you want, and the pre-approved allow you to do. We found the property, We go through all the process in pensions, contingencies in the property. You apply for the loan at that point. You finalize your loan approved, and then we go to closing. Closing is the moment that you get the keys for the property and you are the owner of the property. That involves several paperwork that you need to sign. But like I said, it's the final step when you are ready on the property. I don't know if that's simple enough or you need a little more explanation.
Great, great. Well, thank you so much. Julia also just put in a question. When considering household income, do you have to have a cosigner on the loan application?
You do not. So it might be one borrower that's, their income is enough to qualify for the loan. One client could have a good enough credit score to qualify for the down payment assistance, and let's say the spouse does not. They do not have to be on the loan. However, we will still request the spouse's, the other person's information as far as the income, to make sure that the household is within the income limits. So we will request the information just for the assistance part of it, but they do not have to be on the loan.
Great, great. Any additional questions? Well, thank you so much, ladies. Any final words you would like to give everybody watching today?
Just don't be afraid. Don't be afraid to apply. Don't be afraid to start the process. As I said before, and I'll repeat that again, every situation is unique. There's no not enough income type of deal. There's not, if your credit is not there yet, we can get your credit there. As long as you're determined and motivated to buy, we will get you to that final destination. And the process might seem, you hear different crazy stories of other lenders, banks, agents. Don't listen to anybody. Apply, get pre-approved, and start looking for a house.
And like I said,
2022 is the year.
Yes, I agree with you, Maria. But also, the market is great. It's a lot of property coming now to the market. It's true. Interest is going high. That means that's the best time to get it. But it's so many wonderful programs that you can get through to you finalize your dream to own the property. That's financial options, first time home buyers, first time programs, assistance with the closing costs. You have many different ways to get your dream come true. And like I said, don't be afraid. You need to try for yourself.
Great, great. I'm sorry, just one final question from Carrie, which was, what was the average credit score?
So the average credit score to get approved in general, or average credit score that we see out there? I mean, and to get approved, like I said, we do it go as low as 580 in some cases for the credit score. That would be an FHA government program. In order for you to apply for the down payment assistance program, you need to be at least 660.
Okay.
So I would say the average score to get the down payment assistance with an FHA loan is 660.
Great, great. And yes, Carrie said also in general, you just answered that. Thank you so much. I guess we have our raffle winners, and then I guess we can conclude today. Thank you all so much for joining us, Maria and Ida. Thank you so much for joining us.
Thank you.
I will definitely reach out to you all. And then also for anybody that jumped on late, you can actually rewatch this video on our Facebook as well as our YouTube. And then I guess the last final thing, Ida and Maria, I'm going to drop you down to announce who won our raffle. So we have two winners today. Nasir Seibert And I'm also getting a phone call right now. And Hanif Henderson. Today, we are raffling off 2 laptops. So if Hanif and Nasir can actually reach out to me via email, or my work phone, I'd like to thank you all for today. And feel free to reach out to me if you have any questions. Carrie, feel free to contact me. You can definitely rewatch this on YouTube or on Facebook if you have any lingering questions. But thank you all, and I'm going to conclude today. Again, if you have any questions, feel free to reach out to any of the people today or myself if you have any questions. Again, Nasir and Hanif, also reach out to me so you can pick up your gift. Thank you so much, and have a great day, everybody.